All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today's February 25th, 2025. And the top story this morning is the market appears to be going risk off. We got a couple of different indicators of that, and given what's happening for the rest of the week, I guess it's not too surprising to see that. First of all, we've seen stocks sell off quite a bit over the last week. Stocks are actually up this morning a little bit, kind of like they were up yesterday pre-market, and then they kind of gave back those gains all throughout the day. So it's a little weird to see risk off in the headline and then the bull on the thumbnail. I get it, but it is what it is. But we've seen stocks sell off quite a bit over the last few days. And now this morning, we've got the yield curve is threatening to reinvert. And actually, parts of the yield curve have already reinverted. The 10-year Treasury is now below the 1 month, or at least it was right when I hit the go live button. We've got people are seeking the safety or the perceived safety of the long end of the yield curve. When you see people buying the 10s, the 20s, and the 30s, driving those prices up and those yields down, usually means the market is looking for safety somewhere. So the yield curve flattening, a sign of risk off. Another big sign of risk off we're seeing this morning is crypto. Just the bloodbath in crypto. Bitcoin is back below 90,000, but it's not just Bitcoin. All right, Solana is getting absolutely slaughtered here. I mean, it's down like 50% since November. Interesting thing I spotted in the chart on Solana today. It's not a chart I look at like ever because I don't do altcoins. But there is an interesting thing I want to point out in the Solana chart that I think people should know, and it might kind of inform what we're seeing in the market. But Solana is getting hit more than anything, and Solana is basically the foundation that all these stupid meme tokens are built on. So I'm actually a little relieved to see Solana leading the losses. That tells me the crypto market is dumping the right garbage. Sorry, Solana bros, it's just how I feel. Ethereum is also getting hammered here, down big. But it's, again, when you see crypto selling off following a sell-off in stocks, it's another indicator of risk off to go along with the yields falling in the bond market. Now, why would the market be going risk off? That's a question worth asking. Well, we've got a lot of things are happening over the next few days. First and foremost, today, super micro, it's your deadline. Now, like, what is this? The stupid sci-fi movie where we have to wait until the bomb timer ticks all the way down to 1 second before we cut the red wire. We can't cut the red wire when the timer reads 5 seconds or 6 seconds. It's got to be 1. Is that how this works, super micro? Oh, we couldn't. We're so convinced we've got the 10K and it's just a formality and the auditor's definitely going to sign off. And that's why we're waiting until the last freaking possible moment to file that thing, right? Because everything is so good at that company. Maybe not. I don't know. We'll find out today, or we won't find out today. The deadline is today, so maybe we don't hear until tomorrow morning. Maybe they get delisted, but they demand a hearing, and so there's another 2-week waiting period. Hurry up and wait. All I know is that company is just, it's dirty. It's so obvious what's going on there. I've had so many interesting and enlightening conversations with these super micro bulls over the last couple of weeks. And I've just learned so much about the human condition. These people are really unbearable. They really are. These spray tan chodes that are just like, number go up, proves it's not a fraud. No, it doesn't. Even Enron stock went up. Anyways, guys, that's NVIDIA's third largest customer. And if they are proven to be committing accounting fraud, or if they have to massively restate their earnings like Enron did, which led to Enron's eventual collapse, that could potentially spill over into NVIDIA's earnings. My gut tells me it won't affect NVIDIA's earnings this week. It's just too soon. Even if Supermicro absolutely blows up today and tomorrow, my guess is NVIDIA is going to say, oh, it's a no, never mind kind of thing. Demand is insane, and we all go about our happy lives for another 3 months. But NVIDIA earnings is the other big question mark this week. This will be the first earnings report since the DeepSeek story broke. So will they say anything? I don't think it's going to show up in their fourth quarter earnings report, but it might show up in their forward guidance. We already had that story yesterday about Microsoft potentially cutting back on data center projects. Any indicator of a slowing of the data center build out in NVIDIA's forward guidance would be in my opinion, pretty catastrophic for the stock, which continues to be priced for absolute perfection. So that could be something that the market is right now de-risking ahead of. And you've also got PCE inflation comes out later this week. The market could be de-risking ahead of that. We've had several CPI and PPI prints in a row, all pointing to the fact that inflation is heading in the wrong direction. We've had inflation expectations shot up last week at the end of last week, according to the University of Michigan. So PCE inflation, if that comes in hotter than expected, that could be another risk to markets. So those are the three things that I think: the NVIDIA earnings, the SMCI deadline, and PCE is probably why the market is being a little careful here. Also, you had that big buy bit hack last week. That's certainly causing some of the selling going on in the crypto markets. So everybody's just kind of like sitting tight here. They got their helmets on. They're in their crash positions. I'm not saying it's going to crash. It probably won't crash, but people are preparing for it nonetheless. Another risk that's going on in this market right now is tariff talk and trade war talk. There's a lot of that this morning. First of all, Trump officials are talking about how they want to tighten even further the restrictions on semiconductor equipment. They're going after ASML and Tokyo Electron today. They're in negotiations with them to try to get them to cut off the sale of semiconductor manufacturing equipment and maintenance support for that equipment into China, kind of prevent China from making their own chips. There's also talk about further restrictions on NVIDIA GPUs being sold into China, or restrictions on the total amount of GPUs that can be exported anywhere. So there's more trade war talk in semiconductors that could also potentially reflect in NVIDIA's earnings. Coincidentally, we got a story going on today that's in Reuters that says NVIDIA is selling a ton of their H20s. The H20 is one of their lower end GPUs. It only costs like $10,000 to $13,000, whereas the H100, kind of the prior generation's most popular model, that was like a $35,000 to $45,000 model. So they're selling a lot of these H20s, the lower end, kind of like their neutered graphics cards, into China right now. Ever since DeepSeek came out, DeepSeek is a lot less compute intensive apparently, and these lower end GPUs, NVIDIA says they're selling a ton of those since that happened. Also on the tariff talk today, Trump was out yesterday. He was talking about Mexico and Canada tariffs. Remember, he signed that executive order putting those tariffs into place on February 3rd, but then immediately delayed them for 30 days while we were negotiating. Well, he said yesterday that we are going ahead with those tariffs starting next week when that 30 days expires. Is that just negotiating out loud via the press? Possibly, probably. Does that mean he's bluffing? No, I don't think so. I think he will put those tariffs in place if some kind of deal isn't reached by then. And just based on the rhetoric that's being lobbed across the borders, both north and south, it really doesn't look like there's going to be a deal. So those tariffs may also be contributing to some of the defensive posturing we're seeing among investors today. We got earnings this morning. Home Depot earnings came out, and they have returned to growth. Comparable same-store sales growth for Home Depot increased just barely, 0.8% higher. That snaps an 8-quarter losing streak for Home Depot, 8 consecutive quarters of declining same-store sales for the Depot, but we have now broken that streak and we have returned to growth. And again, guys, it's just barely 0.8%. Keep in mind, while inflation is 3%, according to government statistics, which are wildly understated in my opinion, they're attributing a lot of those gains to Hurricanes Helene and Milton. They're saying 0.6% of that 0.8% growth was due to the hurricanes. So that makes sense. You know, when neighborhoods get leveled, Home Depot is going to sell plywood and 2x4s and everything else you need to recover from a storm. Also, the comps after 8 consecutive quarters of decline, Home Depot's comps are growing versus very low year-ago estimates. So I don't think this is like an all clear for the housing market. Everything's growing again. Not really. I think this is just, you know, the right alignment of stories, creating the illusion of growth in an industry that is otherwise still very much frozen. Another interesting story, Hims and Hers. This is something I don't usually cover. I generally have a strong distaste for the pharmaceutical market. So I don't talk about pharma stocks an awful lot on this channel or ever. I try to avoid them, to be honest with you. But Hims and Hers is getting crushed this morning, more than 20%. And it has to do with these GLP-1s, basically the Ozempic, the weight loss pills. there was a shortage of the injection equipment for these GLP-1s, which through some obscure maneuvering of the law allowed hims and hers to sell these things. And now apparently the FDA has said that shortage is no longer a thing. And because that shortage is no longer a thing, we're no longer allowing the compounders to sell these things when we otherwise wouldn't allow it. Now, these GLP-1s are responsible for more than half of the revenue at Hims and Hers, almost all of this growth. I mean, this stock is up ridiculously, a ridiculous amount over the last 3 or 4 months and the last year or so. It's giving back all those gains now. The company said yesterday they probably won't be able to continue selling that as the FDA cracks down. So that one's going on this morning. We also got another undersea cable was cut in Taiwan. Hey, you scratch my anchor. That just seems to be a thing where we drag anchors along the seafloor, cutting cables these days, making life miserable for people. Yay, the leaders of the world. You're doing such an amazing job. Keep up the good work. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button so you can come and have your coffee with the melon heads because we do this one every morning. Right now, the S&P 500, it's positive just barely, 3.5 points, 0.06% higher ahead of the opening bell. The Dow also positive, a little bit, almost 0.25% for the Dow, doing a little better than the S&P, about 100 points to the upside. The NASDAQ, however, is in the red here, down about 12 points ahead of the opening bell. So stocks are a little bit mixed here this morning. The DXY, meanwhile, is headed lower, down about 27 basis points or 0.25% at 106.40. Now, the bond market is pretty interesting today. Notice the big move down on the long end of the yield curve. I guess we'll say it's a medium move, right? About 7-8 basis points. That's a pretty big move to the downside. And also keep in mind the inverse correlation between yields and prices. You got a lot of people are buying the long end of the yield curve this morning. The 30-year Treasury is at 4.586, down 6 points and change. The 10-year Treasury, 4.317, down 7.5 points. Big move down on the 10-year. The 2-year, 4.115, that's down 5 points and change. And the 1 month is actually up a fraction of a point at 4.31. I would draw your attention, guys. The 10-year, 4.317. Okay, they have uninverted, but they're for a while there this morning, the 10-year was lower than the 1 month. And actually, if you look at the timestamps here, that 10-year quote is at 9:17 a.m., but the last quote for the 1 month was an hour ago. So I think you'll probably find right now that the 10-year is lower than the 1 month once that chart starts updating. You've got the yield curve is re-inverting. Again, another sign of risk off. As people move out on the yield curve, they hide in the 10, in the 20, in the 30. It is perceived as safe there. Now, the one thing that is not screaming risk off this morning is the precious metals market. And that's a little unusual. Typically during risk off, you would see metals do very well. But let's also keep in mind that metals are pretty much at all-time highs, or at least gold is here. So to see gold pulling back a little bit from an all-time high, not too surprising. Spot gold right now, 2,941. Again, that's within a couple of bucks of an all-time high. It's down about $12, $11 and change this morning. 0.4% lower. Spot silver, meanwhile, is at $32.07. That's down by about 29 cents or about 0.9% this morning. Copper's off by about copper is up by 0.7% this morning. Platinum is up by 1%. Palladium is down by about 0.8%. And oil is a little bit lower here, 44 cents to the downside for April WTI futures at $70.26. That's down by about 0.6%. Bitcoin, on the other hand, big time move down in Bitcoin. It may be catching a bounce here. Currently, $88,964 as priced on Coinbase. We broke below 90,000 last night. And in the middle of the night, we went as low as 86,784. Bloodbath in Bitcoin. Look at these last few days here. Big breakdown, guys. We were kind of in this little range here for the last couple of weeks. And we did break out of it. It just wasn't the breakout I was hoping for. It was a break to the downside. Now we're sitting here at 89,000. Now it looks like it's catching a bid here. Again, you got a big tail at the bottom of there, a big wick on that candle. If we set this to 1 minute candles, okay, there's been a little bit of buying off the bottom, but not a whole heck of a lot here. Bitcoin is having a rough morning. Let's talk about what's going on here. Bitcoin tumbles under 90,000 amid ETF sell-off and mounting liquidations. Not something you want to hear. Bitcoin dropped below 90,000 mark for the first time since November, raising concerns among analysts about further declines amid ongoing sell-offs in the U.S. spot Bitcoin exchange traded funds. The decline followed another wave of selling in U.S. Bitcoin ETFs, which recorded more than $516 million in net outflows on February 24th alone. The ETFs have now experienced 6 consecutive days of selling, according to data from Farsight Investors. Bitcoin's price has fallen by 6.2% in the 6 days since the ETFs began their selling spree. Now, it's not just Bitcoin ETFs that are selling. We've also got a lot of liquidations. Where's the hack? Hold on a second. Let me find that. They're talking about it here. All right. Beyond geopolitical events, they're also mentioning tariffs might be playing a role in the Bitcoin sell-off. I don't know so much about tariffs, but beyond geopolitical events, crypto investor sentiment has taken a hit from internal factors after the industry was rocked by the largest hack in crypto history on February 21st, when Bybit lost over $1.4 billion. Now, guys, it looks like those hackers were very quick to liquidate that $1.5 billion that they stole. Keep in mind, that's a big drain on liquidity. If you got this big crypto hack and the guy's real quick, they hide it, they move it through washing apps, they go wallet to wallet to wallet, and then eventually sell. They're draining $1.5 billion in liquidity out of the market in very short order. That basically right there absorbs kind of, if you view the crypto market as a whole as one giant bubble and you throw all the coins in, that right there is enough to absorb most of the buying that MicroStrategy has done over the last few days, right? Just that one story alone, not to mention all the fallout from people who got spooked and pulled their coins off the exchanges or just decided to take their gains and sell because they don't like what's developing. So the hack, I'm sure, played a role here. Now, interestingly enough, the coin that is taking the biggest hit appears to be Solana. First of all, right now, Solana down 12.3% on the day. All right, now contrast that with Bitcoin, which lost 3%. So Solana is clearly the big loser here. Now, the interesting thing about Solana, if you set to a one-year chart, Solana has actually been selling off since January. This sell-off is about a month long now. And interestingly enough, the sell-off started, the peak was on January 18th. Now, the significance of that date is January 18th was the day that the Trump meme coin got rug pulled by the Melania meme coin, and then the Melania meme coin got rug pulled by the Baron or the whatever. The Trumps rugged each other. And you had Hawk Tua's second rug pull, and Dave Portnoy ran like a half a dozen rug pulls. And then you even had Javier freaking Milei involved in a rug pull. Well, all of these stupid meme tokens are all built on Solana. So when I see a sell-off in Solana and you can trace it back to the day of the Trump meme coin, it really looks like that marked the top in the meme coin hysteria. And look, guys, regardless of your political inclinations, let me just say, meme coins are freaking stupid. Whether you like the person sponsoring them or not, it's a bad idea. Do not touch, run, do not walk for the exits. And the fact that this sell-off in Solana has been so brutal, I mean, in the last month, it's lost 45% of its value. We're down from a peak of 261 to 138 here. Just don't touch the meme coins. The fact that Solana is selling off so hard tells me at the very least the selling is in the right place. Remember, guys, crypto winter is coming eventually. My gut tells me it's not here yet, but this could be the start of crypto winter, especially in the context of a broader market risk-off move. Also going on this morning, let's talk about the trade war. Trump team seeks to toughen Biden chip controls over China. This one hit just late yesterday. The Trump administration is sketching out tougher versions of U.S. semiconductor curbs and pressuring key allies to escalate their restrictions on China's chip industry. An early indication the new president plans to expand efforts that began under Joe Biden to limit Beijing's technological prowess. Trump officials recently met with their Japanese and Dutch counterparts about restricting Tokyo Electron and ASML Holdings engineers from maintaining semiconductor gear in China. according to people familiar with the matter. Now, Tokyo Electron and ASML, they are semiconductor manufacturing equipment manufacturers. They make the stuff that makes the chips. So Trump is trying to get these companies to stop signing maintenance contracts to maintain the semi-manufacturing equipment in China as a way to hamstring China's domestic industry development. Now, the meeting comes in addition to early discussions in Washington about sanctions on specific Chinese companies, other people said. Some Trump officials also aim to further restrict the type of NVIDIA chips that can be exported to China without a license. Bloomberg has previously reported this. They're also having early conversations about tightening existing curbs on the quantity of AI chips that can be exported globally without a license, said some of the people who asked not to be identified because deliberations are private. Now, when they're limiting global exports, in my opinion, what they're saying is like, we know these things are going to China, whether you're billing to Singapore and shipping to Malaysia or routing them through the Dubai to get into China eventually. So they're trying to limit the total export market, knowing that people are probably going to find their way around these export controls one way or another. So possibly we're looking at total limitations on global exports, possibly expanding the population of what chips are export restricted on top of the semiconductor manufacturing equipment. None of this is particularly good news for NVIDIA. Now, this is good news for NVIDIA. NVIDIA's H20 chip orders jump as Chinese firms adopt DeepSeek's AI models. According to sources, I wonder if those people are familiar with the matter, Chinese companies are ramping up orders for NVIDIA's H20 AI chips due to booming demand for DeepSeek's low-cost AI models. 6 people familiar with the matter said. So the whole familiar with the matter family got together and said this thing. Interesting. The surge in orders, which is being reported for the first time by Reuters, underlines NVIDIA's dominance in the market and could help alleviate concerns that DeepSeek might cause a slide in AI chip demand. Tencent, Alibaba, and ByteDance have significantly increased orders of the H20, a chip specific to China due to U.S. export controls, since the Chinese AI startup burst into the global public consciousness last month, 2 of the 6 people said. We've also got more tariff news about Canada and Mexico here. I mean, the story here, guys, is those Canadian and Mexican tariffs, they're still a thing. President Donald Trump said Monday the sweeping U.S. tariffs on imports from Canada and Mexico will go forward when a month-long delay on their implementation expires next week. The tariffs are going forward on time, on schedule, Trump said when asked at the White House press conference if postponed tariffs on the 2 U.S. trading partners would soon go back into effect. Look, they signed this tariff agreement, or it wasn't really an agreement, it was an executive order. They signed this. And then this was on February 3rd. They immediately paused them for 30 days while negotiations were underway with Mexico and Canada. All right. That takes us somewhere to the middle of next week. I don't know exactly when 30 days is. Let's say Wednesday of next week, that 30-day expires. And Trump is saying, yeah, we're definitely going to go forward on those tariffs, assuming no deal is made or they don't just delay it again. So that's probably contributing to the defensive posture of investors this morning as well. Now, let's talk a little bit about earnings. We got Home Depot earnings beat Wall Street estimates as the retailer breaks comparable sales losing streak. A little bit of positivity for Home Depot. We haven't seen that in a while. Home Depot on Tuesday topped Wall Street's quarterly sales expectations, even as elevated interest rates and housing prices dampened consumer demand for large remodels and pricier projects. For the full year ahead, the company said it expects total sales to grow by 2.8% and comparable sales, which takes out the impact of one-time factors like store openings and calendar differences, to grow by about 1%. Home Depot projected adjusted earnings per share will decline about 2% compared to the prior year. So that's interesting. We're looking at 2.8% growth in total sales, but 2% decline in earnings. So a little bit of pricing pressure Home Depot is seeing there. That's interesting. The cure for higher prices is higher prices. Now, here's what they reported for the prior quarter. For the 3 months ended February 2nd, Home Depot's net income climbed to $3 billion or $3.02 a share. That's up from $2.8 billion or $2.82 a share in a year ago period. So a little bit of bottom line growth there. Revenue rose 14% to $34.79 billion in the year ago. So good top line growth as well. Comparable sales, a metric also known as same-store sales, increased 0.8% across the company. Those results ended 8 consecutive quarters of falling comps. So look, obviously we're not up against a very difficult comp. If you've been falling for 8 consecutive quarters, then okay, we've got growth now, but it's growth from a very low number. Those exceeded expectations. And they're also saying here that regions hit by hurricanes Helene and Milton contributed about 0.6% to comparable sales. So almost all of that growth was the effect of the hurricanes. That's not something that's going to be reproduced in subsequent quarters, in my opinion. Home Depot stock doing all right here. It's up about 0.7%, $385.43. That's up by about $3 this morning. So all things considered, Home Depot is doing all right here. Now, this company is not doing all right. Hims and Hers shares tumble after the company misses on margin and says they may stop selling some weight loss drugs. And it's that weight loss drug news that's really killing them here. Hims and Hers Health plunged 18% in extended trading on Monday after investors looked past better than expected revenue and earnings and focused instead on disappointing gross margins. Here's how the company did. Now, look, revenue at the company increased 95% in the fourth quarter from the same period last year. 95% jump in revenue. That goes to show you how much of this Ozempic derivative stuff they've been selling. I mean, they virtually doubled their sales through this. However, the company's gross margin, or the profit left after accounting for the cost of goods sold, was 77%. And that's disappointing investors. Analysts had been expecting 78.4%. And maybe this is one reason why I hate the pharmaceutical industry so much. Earnings, their profit margins are 77%, and that disappoints people. That is amazing. These things are money printers. Now, in the second big stock drop for Hims and Hers in a matter of days, shares tumbled 26% on Friday after the U.S. FDA announced that the shortage of semaglutide injection products has been resolved. In May, Hims and Hers started prescribing compounded semaglutide, the active ingredient in Novo Nordisk's blockbuster GLP-1 medications Ozempic and Wegovy. The company was a breakout star within the digital health sector in 2024, in part because of the success of its popular new weight loss offering. The company said its GLP-1 offering generated more than $225 million in revenue in 2024. That's half of their sales. And the stock climbed about 200% for the year. Now, compounded drugs are custom-made alternatives to brand-name drugs designed to meet specific patients' needs, and compounders are allowed to produce them when brand-name treatments are in a shortage. But the FDA said on Friday that that shortage is no longer a thing, and so they're going to start cracking down on compounders in the next 60 to 90 days, which means Hims and Hers will not be able to sell these weight loss drugs much longer, if any more at all. And, well, that is enough to take this stock down 20%, 20.5% this morning, $40.77. That's down by $10.67. Now, let's put this decline in context, however. In the last year, this stock is up 438%. All right, this thing has quintupled in the last year. There you go. Now you can kind of see, all right, it's been a pretty abrupt fall from grace after this thing rocketed over the last couple of months. Look, there was a dislocation in the market, a shortage of the drug that allowed them to take advantage of it and sell a ton of the stuff, and now it's gone. And so rags to riches, back to rags. Also going on this morning, another case of these cables. Taiwan detains 8 Chinese nationals after undersea cable was cut. This just gets more and more normal as time goes on. Taiwan detained the Chinese crew of a freighter after an undersea communications cable to one of its offshore outposts was severed, a move that risks heightening cross-strait tensions. Taiwan's Coast Guard said the 8 crew and of the Togolese registered vessel were taken into custody on Tuesday. The incident was being investigated to see if sabotage of the cable linking Taiwan's main island and the smaller Penghu was involved. The Coast Guard said in a statement, adding that the freighter had earlier lingered near the line crucial to internet connectivity. We've seen about a half dozen stories like this in just the last few months. And last one of the day, Tesla to acquire some assets of struggling German supplier Manz. Shout out to my moderator, Mish, found this one, along with several of the other stories this morning, I might add. This is interesting. Tesla buying factories. Now, we were talking earlier this week about how Tesla was looking at possibly buying some Nissan factories, and now it looks like they're buying some from Manz here. Tesla agreed to buy certain assets of embattled German automation system supplier Manz, which has entered insolvency proceedings after facing a liquidity squeeze. Tesla Automation, which makes special purpose machines at 3 locations in Germany, will add Manz Reutlingen site to its operations and take over more than 300 employees, as well as movable tangible assets, Manz said. The parties agreed not to disclose the purchase price. About 100 Manz workers are set to lose their jobs after the acquisition. The manufacturer had invested heavily in battery cell production technology. They filed for insolvency in December after a prolonged downturn in the market. So it's a good bet that Tesla not just buying the automation capacity, but they're buying the technology to build those batteries. Tesla is adding automation capacity in the key German market as it tries to counter a sales slump in Europe. The Elon Musk-led company's registrations in the region cratered 45% last month, while overall demand for electric vehicles surged. BYD is just eating their lunch in Europe. That is no secret. We've been talking about that one for quite a while on this channel. And I just want to say thank you so much to Static Cat. Thank you, Cat, for the super chat. Says, how does Bitcoin tumble affect MicroStrategy? MicroStrategy is essentially a levered. Some people might take issue with this description, but in my opinion, MicroStrategy is just a levered Bitcoin ETF at this point. That they're a Bitcoin holding company. So whatever Bitcoin does, MicroStrategy is going to do more of, or I'm sorry, their strategy now. The artist formerly known as Micro. So Bitcoin down a couple of percent, MicroStrategy down a lot of percent. If they go up, the opposite happens. So I'd imagine MicroStrategy is not doing so well here. But also keep in mind, MicroStrategy, we talked about this yesterday, their average purchase price is in the low 60,000s here. So it's not like MicroStrategy is about to get liquidated anytime soon. They've got a moat. It's not the biggest moat they've ever had, but they've got about 38% protection to the downside at this point. Thank you very much, Static Cat, for the super chat and the support of the channel. Thank you, JJ Watt, who says, if Bitcoin can reach 90,000 without the cost of everything else skyrocketing, I don't know if that's true. The cost of everything else kind of did skyrocket already. Can gold do this too? Yes, it absolutely can. Was Bitcoin a test run for asset revaluation for gold? I don't really think Bitcoin was a test run. I mean, you're kind of like lingering into like the grand plan kind of thing, and like this kind of like giving me shades of. I got a lot of people who insist that Bitcoin was a CIA psyop. I don't buy into that particular line of thinking. I don't see how the CIA benefits from it, to be honest with you. I'm sure they figured out a way to use it now. But look, I think Bitcoin was just an alternative asset class that emerged from the grotesque monetary debasement that followed the great financial crisis, the global financial crisis. They printed their way out of it, and people were like, hell no, you're socializing losses from Wall Street by stealing from my savings. I'm going to create a new vehicle that you can't control and do that. And that's where Bitcoin came from. Now, yeah, that does overlap somewhat with gold and the function that gold plays. But again, I've said this often, Bitcoin and gold live on totally opposite ends of the risk-reward spectrum. And while they do have some qualities of protection against monetary debasement, I think the similarities between the two end there. So was Bitcoin a test run for the revaluation of gold? No, I don't think so. The revaluation of gold, it's really just another money printing scheme, JJ. If the government was serious about taking advantage of the value of the gold that it holds, they could just sell it, right? They could just, it's sitting on their books for $44 an ounce. They could sell it for almost $3,000, but they're not talking about doing it. They're talking about revaluing it by issuing gold certificates and then giving those gold certificates to the Federal Reserve, and then the Federal Reserve prints a bunch of money and gives it to them. That's just money printing. That's all that is. It's an accounting gimmick to create more currency to get around the debt ceiling. So to be honest with you, the whole gold revaluation thing, it's net bullish for gold because it's going to add to the money supply, and that inflation will drive gold higher. Just like I think gold revaluation is net bullish for Bitcoin as well because it's more money printing. Now, that being said, because Bitcoin is so high risk, high reward, you are going to see certain times where Bitcoin trades in tandem with other risky assets like tech stocks. And this is a very questionable period for tech right now. It is also near all-time highs, but has recently pulled back. And you got a fork in the road up ahead with this SMCI and these NVIDIA earnings, not to mention questionable inflation readings. So I'm not terribly surprised to see the behavior of Bitcoin here, to be honest with you. I don't think we need to really read that deep into this and get all that. I don't know that we need too much of this to really understand why Bitcoin is selling off here. I think Bitcoin is selling off here because the market is just being more careful about its risk right now. Virtually every asset class across the board is at an all-time high. People are taking profits and they're hiding on the long end of the yield curve. I think it's just really simple like that. Thank you very much, Mr. Watt, for supporting the channel. You powerful SOBU. Sorry, engineering jokes. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys rock. I appreciate that very much. Shout out to my magnanimous Melonheads on Patreon and YouTube. You guys are awesome. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.